GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Well, we had a dramatic finish to last week. Suddenly fears about a new virus variant hitting the markets. The Omicron obviously got people a little bit spooked. We saw a big sell-off in stock markets, a gigantic sell-off of 10% in oil markets, and interestingly had a flight out of the dollar and into some of the other currencies. And so while gold actually had a pretty rough week overall, it actually got a modest bounce towards the end of the week on Friday and kind of held its lows. So I'll talk about all that and more. As always, let me know if you want me to cover something else, some other markets or other forms of analysis, any setup that you're looking at, etc., etc. Otherwise, click the like button, please. Just hit that thumbs up button just under the video. That really helps us a lot. Right, let's have a look at the euro dollar. We normally start with the currencies, work our way through to the commodities, then indices. So let's start with the currencies, and you can see, let's just pull ourselves out a little bit. We got this pretty well. We drew in this area of support last week, and as you can see, a nice little hammer pattern on the weekly charts, symbolizing a potential bottom in euro dollar. Now this is obviously a pretty steep downtrend, way too early to be calling a bottom, but we did highlight the fact that we dipped into oversold territory, and we've obviously had a slight bounce out of oversold territory and off that former resistance and support and turned temporary, at least, support again. So where do we find ourselves in more of a trading time frame? Well, you can see the price has popped up above the 50-period moving average on the 4-hour chart. That's been kind of capping the decline somewhat, and you can see there's been a change in momentum, a pop to the top side, but the trend is still down on this time frame. So the way I'm thinking about this is that after you see a little pop like that, it does show that momentum's changed, and I suspect we get some follow through. Now, the weakest follow through would just be a kind of like maybe a bounce from where we currently are, come up towards that peak that we just made, and then roll over again. What I think we could potentially get is a further push beyond this peak into a sort of A, B, C type pattern. And where C ends, obviously I don't know, but I suspect it will be under the 20-day moving average. We've got, this is where the price really sold off, and so this could be an interesting price level, just above 113.50. Yeah, right in at that 113.50 area, and then above this zone, which comes just under the 20-day moving average, is that longer term area of interest that we'd highlighted before, which you can see on this weekly chart, didn't even make a dent. The price just plummeted straight through it. But if you look on the 4-hour chart, actually we did stutter around it a bit, dropped through, came back, retested it. So actually it did on the shorter term basis have a bit of an impact. And if we got up to that peak again and even nudge through it up to 114, I still think that area could serve as it is a supply area, and thus could push the price back lower again if we get that kind of A, B, C sell into the downtrend. So that's a possibility for what we're looking at next. The very short-term momentum looks more positive, but we're in a downtrend, and so I think the downtrend holds. But obviously we've got to bear in mind that we did see that nice weekly reversal. So if we do get some kind of selling from up here, maybe maybe it comes back down towards 112, and then at that point we can kind of start thinking of maybe there's going to be a bottom if we come down and test this area. Now, if this actually does hold and turn into like a morning star pattern, then in theory the price should not drop below 112, whatever that is, 45, something in that area. Basically that's the first eye on the kind of Pinocchio. The right eye so far hasn't dropped too far down. It needs to hold about here for this reversal pattern to hold. So look out for that. I'm still thinking about this in terms on the 4-hour time frame. I'm still thinking about it as a downtrend, but I am aware that we have seen some good momentum off of a long-term potential area of support. And I think that long-term support is another reason to think we can get another push up. And so selling, I think, around this high, potentially a little bit too early. Let's see. Moving on to the British pound, let's just give some context to this on the weekly chart. This was our big long-term level that we've been talking about. We did eventually flush through it, and now we're kind of testing up from the underside of it. On the 4-hour chart, you can see that. That's where we dropped under it, and we're kind of nudging up underneath it. Again, the formation is a downtrend on the 4-hour kind of trading time frame, if you like. And you can see that so far, this is when that last leg kind of started. And this is our first area of supply. It's under the 50 period moving average. So you can see this has been holding off the price, and maybe we don't even get any higher than here. If we do, this was obviously a period of consolidation, which we finally broke down from. So I think that could be an area of interest starting at 134.20 up through to 134.50. That I think would be a pretty interesting zone. Pop up a bit more momentum to get through the 50-day and then roll over underneath the 20-day moving average. That potentially could happen. We could get all the way back up to 135, and I think that would have a good risk to reward. But if we do get that far, it would suggest to me that maybe this was a false breakout of the low, and actually things are turning more positive. Interesting that just as a side note, interesting that the dollar is sort of stuttering a little bit. I mean, it's still definitely a positive dollar, weak euro, weak pound trend at the moment. But interesting that the dollar did stutter a little bit on Friday when the market really sold off. I guess the logic there is that there was just unwinding of positions across the board. I think there was a bit more interest in haven assets like gold, which adversely affects the dollar. But the Forex market's much bigger than the gold market, so that doesn't necessarily hold up. What I think it could be is that markets had been really aggressively pricing in Fed rate hikes, but that suddenly becomes a lot more questionable if there's like a much more serious outbreak of the virus. Then obviously you would imagine the Fed would not be aggressively tightening policy into a new sort of fourth, fifth wave, whatever it is, of the virus. So then the rate hikes, the bets for the rate hikes in the US get pushed back out again, and so the dollar lowers down again. I think that's some of what's going on. And one of the more dramatic examples actually of the dollar sell-off on Friday was dollar yen. Obviously the yen is a haven currency, and so that I think that was pretty much what was going on, was that we got the false breakout above 115 and then just zonk over 200 pips down straight into 113. And you can see on the 4-hour chart, this is our sort of demand zone down here, which we just about tagged as well as 113, and we're chopping around there at the moment. But interestingly, this is left in from last week. So we had highlighted the bearish divergence as a phenomenon. Obviously, we popped up for that third and final divergence. That often is the case. If you do try and sell bearish divergences or buy bullish divergences, quite often the first one won't work, and then the second one does. So obviously you're talking about there's the first peak, and then there's the first sign of divergence, and then there's a second sign of divergence. Quite often, the first one doesn't work because you're basically selling into an uptrend in this case, and the price does make a new higher high. You get stopped out, but if you persevere, then quite often that second, sometimes even third higher high, you take a couple of small losses if you manage your risk, and then you get the possibility of a big juicy sell-off like that. Take profit near support. Potentially could have been a great trade. Bigger picture, we're still sort of technically, I would say, in a kind of uptrend based on the moving average and the way the highs and lows are going. But I think dollar yen is now showing itself to be in a range, and I think the clearest cut trade would be just to break through this low to show that the downtrend has kicked off. Otherwise, I think we're just in for another bit of choppy trading, bit like happened here. Choppy trading sideways, nice trend, choppy trading sideways again. And remember, just to mention that we have had a big reversal on the weekly chart from that major resistance. So look, 1 week and then 2 weeks in a row with big tails through that resistance, showing a false breakout. So looking at this weekly chart, it does suggest to me that we're going to go through a little period of weakness in dollar yen, potentially a new downtrend, unwinding some of this trendy period that we had. Let's switch gears to metals. So yes, let's look at we can look at the weekly chart again. So we'd drawn this trend line in ages ago, and when the price did start stuttering around there, we did say that was a potential sell opportunity up there, even though the price was looking pretty strong. And then I think if you go back in time, with the benefit of hindsight at least, you can say that once the price had tagged the long-term downsloping trend line, you could have just sold at the trend line. Some people would have done that. Or if you did saw the price heading up here, and we'd highlighted this channel, once you saw the drop through the channel here, this could have been, instead of selling at the touch, or after that first down candle from the long-term trend line, you could have waited for the confirmation with a change in short-term trend. So we dropped through the 50 period moving average, we broke below this rising trend line. So round about here would have been your signal to sell gold back into its old trading range. So sell, 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 sell. And then as we currently find ourselves, obviously things getting a little bit choppy, trying to find a base around 1775-ish. To me, this has been our area of interest for a while, basically around 1750 and the zone around there. So I think at the current level, I don't really see necessarily, except obviously that's just where the two moving averages have converged, just showing how flat overall this market has been. Apart from those two moving average, not a lot there, except, so my logic would be, just like open to the idea of selling at the long-term area of the range, I'd be interested in buying down near the kind of longer-term area of interest on for the upside, down the bottom of the range, somewhere in here. Up here, to me, it makes less sense. Though obviously the price has been stuttering here, I would say it probably resolves to the downside, and then you start looking for something reversing down there in that demand area. Either the very short-term demand area would be good if that worked, just chop down to there to 1760 and a bounce, or further into 1750 and that bigger area. Gold, a bit of a choppy old market at the moment. This was a nice trade, but yeah, they're a bit few and far between, just because it's not trending too neatly. Similar situation in silver, obviously. This is our long-term trading range. We did have the false break lower, which we talked about, and then we had the break above the previous two highs. It was obviously looking very bullish at this point, but it proved to be a false breakout. It tagged the 50-week moving average, and it's tanked for the last 2 weeks, and we're testing support from that little hammer candle there on the weekly chart. So this is our daily chart. 23 is support for the time being. I think in around 2250 is obviously, that was a kind of an area of interest in the past where the price stalled for a bit. It kind of rallied, it fell through that area of interest and then bounced back into it and eventually rallied. So we could drop into there and rally. It'd be a similar sort of thing for gold, like another little dip down and then maybe the base. This is the weekly chart for Wti Crude. You can see we've come just shy of the 50-week moving average before getting a bit of a bounce off the lows. Obviously a pretty hefty sell-off last week. And interestingly, we've already highlighted this, but the bearish divergence on the weekly chart proved to be a pretty useful one. You know, the first one did work to some extent, just depending on where you had your profit targets. If you had sold up here somewhere, based on the RSI divergence, but if you were targeting the old support, obviously it wouldn't have worked and the price came back, maybe you got a scratch of a trade. Then you would try it the next time. Well, we've come down to the 50-period moving average, but we haven't actually come down all the way to support yet. But I think maybe we can. We get a rally up and then another drop down to really test this major support, which is about $60. On this weekly chart, you can see the trend is still up, and we've dipped. So in terms of buying the dip on the longer term strategy, this is an opportune moment for buying while we're still making higher lows. On the 4-hour chart, you can obviously see it's a different scenario. What you'd more want to be doing, I think, is having had that steep drop, looking for it to recoup some of that steep drop, probably to around 75, which is this, these lows through here, for it to resume the sell-off. And if not, then it would be, up to where this big sell-off began. Maybe we can recoup this whole sell-off, and around 78 could be the interesting place to, again, you can see the shortest term moving average below the longer one. We're in a downtrending scenario. Maybe that would be the place to try and sell down. Switching gears to the S&P 500, we've not had a down day like this for a while. We've had a few, but took us neatly out of this sideways range. We talked about, I think it was even on Monday, when was it? Hard to pinpoint based on dates here. That was last Monday when we had the false breakout. I think when we were doing the last webinar, or maybe it was afterwards. But obviously, yeah, that's what we can see. We had the highs come in, false break to the top side, sold off, tried to get through it again, another false breakout, like 3 little intraday pushes above the old high, didn't quite work out, and yes, the market is tanked and fell back to 4,600, which again, this is drawn in from last week. That's just what I said. Maybe we get a little dip down to 4,600. It happened very quickly, but still a bullish market. Price still above the 50-day moving average. And this is about the 20-day moving average. I don't have it drawn in, but that's actually about where we bounced towards the 20-day moving average, which is still above the 50. So everything configured still for a bull market. One thing I did want to note is, this just using this low down here, this trend line sort of has been pretty well defining this uptrend. I mean, that's, roughly speaking, that is the kind of channel we've been in, right? Something along those lines. You can see it's lost a little bit of momentum recently. So potentially just coming down to test somewhere around that channel, and that actually might just be, these 2 peaks through here, depending on how quickly we decline, around 4,400, something like that, would be where we kind of broke out last time. Maybe just a dip down to that channel and then resume the uptrend. Tempting to feel panicked after a big sell-off like that, but obviously we just need to look back and see that whenever these little panic days have happened in the past, it's generally been a good buying opportunity. Maybe this will be the bigger top. I'm just saying in the past it rarely has been. Finally, let's have a look at Bitcoin. So the bearish divergence play that we mentioned before here has worked out pretty neatly, and we've almost come back to the previous high, which is something we were talking about when we first talked about that bearish divergence up there, coming back to kind of test the old high, because that's kind of what happened here. Had the bearish divergence, came back, tested the old highs, and then rallied up. So here, bearish divergence, come back, tested the old high, and then maybe rallies from here. So it's a fairly decent discount in Bitcoin, 57-ish thousand. down from 69,000. If you still believe in the story, obviously again it's a decent dip in Bitcoin. Very similar pattern to last time, the bearish divergence, dipped under the 50-day moving average, and then obviously we chopped around under it and then finally broke big back above it and had that next leg. So if we chopped around here and then broke above, it'd be an exact replica almost. And it's looking quite good. If you look on the short-term chart, we had this area of support. The price tanked down through there on Friday, but over the weekend we've gapped back over it, and you can see where the price gapped over it, came back, tried to kind of test the gap, the support from before, and is sort of popped up, dipped a bit, but you can see this gapping up over the weekend looks fairly positive through the support. The next thing we'd want to see is the price move back over this resistance through here. Alrighty, I'm going to leave it there. Thank you very much for watching, everyone. Good luck trading this week. Should be an interesting one. We've got NFPs on Friday, so a lot to play for, and probably one of the, depending on how things go with the virus, maybe we do get a volatile December. But remember, things do tend to slow down in the second half of December. So first week of December coming up, first few days of December obviously, and then week after that. These are really the potential trading opportunity weeks. So look out for those. All right, thanks everyone. See you at the same time next week. Thanks.